Good evening, Kanis. Good evening, Roshni. Good evening, Golapalli. Hi, Shubhangi, Rajiv, Meshak. Hi, Nikhil. How are you guys? Fatima, Surya, Priyadarshini. Very, very good. Manoj. Hi, Bittu. Hello, Anjani. Video off. हाँ ठीक. Hello, Femina. Hi, Sindhu. हेलो दीक्षा. प्लीज टेक एटलीस्ट 8 टॉपिक्स. पहले 5 पढ़ ले धीरज. सब ऊपर ऊपर से मत कर. 8 क्या लेने को. If you want, we can take 20 topics. But it also depends how much you're understanding. And good evening, Akansha. Sir, please add MCQs for cross-checking. It's already added, Kishan. Like what MCQs are you talking about? Good evening, Saksham. Good evening, DJ Rania. Weirdo. Good evening. So we'll wait 1 more minute, guys. Then we'll start. Answers on the slide for MCQ. Yeah, I'll try that from the next time, Dheeraj. I've tried to do that today, but let's see, Dheeraj. Good evening, Nandini. Sure. Let's start with the session, sir. So the first topic that we will be dealing with is Indian agriculture, MSP and WTO. Now, this is a very recurring topic and often some or the other question gets asked from this topic. Recently, when the farmers' protest was there, even this issue again got raised. And then there are certain issues which pertain to MSP and how WTO impacts these issues. Let's try to understand those issues. So, what is their importance? It is important for both prelims as well as for mains. For prelims, we need to understand what are the various subsidy boxes, green box, amber box, and the blue box. We need to understand what is the de minimis limit. Then, what is this Nairobi package? Then, what is this special safeguard mechanism? And what is this peace clause that is often in the news? Direct prelims questions have already been asked. And then, direct 2023 question was also there. I think it is a little bit today, is it? So directly 2023 question was also asked. What are the direct and indirect subsidies provided to the farm sector in India? Discuss the issues raised by the WTO in relation to agricultural subsidies. So in this context, let's start our discussion, guys. Just 1 second, guys. Again, some technical aspect is there. भाई किसको भेजे, उसको कुछ पता ही नहीं है। देखो दो दिक्कतें आ रही हैं। एक तो हमारा वो जो स्क्रीन है कुछ ज्यादा बड़ा हो गया है, पीपीटी ढक ले रहा है। दूसरा, पीपीटी बहुत जूम होके आ रही है, पीपीटी को अनजूम कैसे करें? हाँ यार, नहीं पीपीटी जूम आ रही है यार। जूम आ रही है? हाँ पीपीटी जूम आ रही है। पीपीटी क्या कहते हैं इसको, अनजूम करना है। हाँ सब पूरा दिख रहा होगा।
हाँ बच्चों को हाँ मजे तो वहाँ दिख रहा सर।
ये पूरी स्क्रीन यहाँ पे कैसे आएगी? Yeah, I think no, it's fine. ठीक है, थोड़ा सा जूम कर दीजिए बस। हाँ, बस काफी। ठीक है, थैंक यू। चलो, let's restart, guys. I think there is some specific problem with this particular day's PPT. Some of the other things keeps on happening. Anyway, let's continue. So this is a very important topic for both prelims as well as for mains. Let's dive into this topic. What is exactly this topic? Now see, World Trade Organization was made in 1995 after solid discussions had started from 1986, and this is what we call as Uruguay round of discussions. Even India participated in these Uruguay round of discussions. Now, in this Uruguay round of discussions, after this Uruguay round of discussions, what happens is that WTO was established and it was a package deal. It was a packaged deal. It was a packaged deal. Now, since it was a package deal, it means that all the members, whoever are accepting to be a part of it, they have to accept all the aspects of WTO. They cannot pick and choose which aspect do they want to be a part of. What this means is they have to accept all the agreements as they were. Not they can pick and choose that they want to be part of agreement on agriculture, they don't want to be a part of agreement on subsidies and countervailing measures, so they cannot pick and choose. So what if any country has a problem with a particular aspect? Then it is to solve that problem that decision making in WTO happens through consensus, which means every person has a veto power, which means every member has a veto power. And it is in that context that we need to understand this agreement on agriculture and what are its various issues. Now, see, this agreement on agriculture talks about three specific things. So, the first thing that the agreement on agriculture talks about is market access. Now, see, why was WTO being set up? WTO was being set up to have a free trade. WTO was being set up for having a free trade where all the countries are interacting freely with each other. Because this was also the time where 1989 we also have the Washington Consensus, and Washington Consensus had reaffirmed its faith on the neoliberal model of development. Sound not cleared after refreshing. Guys, is the sound and video clear? All right, guys. All right, guys. Thank you so much. Now see. So 1989, we had something called as the Washington Consensus, in which they reaffirmed their faith to neoliberal model of development. Now, what is this neoliberal model of development? Under this neoliberal model of development, now we need to understand that from 1940s to 1990s is the era when strong state dominated the economics. All the decisions of economics were being taken by governments. And since 1980s and the late 1980s, it was realized that government is engaging too much in the economy, and the government needs to take its hand out of the economy and let the markets have more liberty. And that is why we have neoliberal reforms. Why neo? Neo means new. Liberal means liberty. So after these neoliberal reforms, markets had to become more powerful. And it is in that context that WTO was set up. And it was said that so far all the countries have restricted market access, and all the countries need to give more market access to the companies of other countries in WTO. I hope this is clear, guys. Now, with this market access, one problem was made. With this market access, one problem we started facing. Now, what was that problem? See, unlike other industries, agriculture is a very sensitive industry. Why? Unlike other industries, agriculture is a very sensitive industry. Why is that? It is because in agriculture, if you have a problem 1 to 2 times, for the farmer, that 1 to 2 times is 1 to 2 years. Which means if pulses prices increase for 1 year, it means the farmer of pulses will face a loss for the entire year, even if they increased 1 time and the farmer incurred losses 1 time. And if it has happened 2 times, farmer will stop growing pulses and our domestic production will start going down. And this was a major problem that we were facing. Now, due to this, what we started was that it was realized that there is a need to restrict market access in case imports increase beyond a certain level. Because if imports increase beyond a certain level, our domestic farmers would suffer. And it is in that context that under Agreement on Agriculture in 1995, special agricultural safeguards were kept. Special agricultural safeguards were kept. Now, these special agricultural safeguards, what do they say? It allows the member countries to increase tariffs. It allows the member countries to increase tariffs. Now remember, WTO is for enabling free trade. WTO is for enabling free trade. And due to this enablement of free trade, you will have to take special permission before raising tariffs. What are these tariffs? Tariffs are basically, you can understand them as taxes that we put on any goods entering from one country to our country. If there is an import, if there is a boundary line, we levy some tariffs. Sometimes we also call them customs duties. And then there are various types of duties and tariffs. So to levy any tariff, you need special permission in WTO. Why? Because WTO works on the principle of that every country should have free trade. And in that context, special safeguard, special agricultural safeguard was already there in Agreement on Agriculture. And this is available to all members. This is available to all members. When we say it is available to all members, both developing countries as well as developed countries. So they can levy certain additional tariffs if imports have exceeded certain limit. I hope it is clear till here what are special agricultural safeguards. In that context, let's try to understand What are special safeguard mechanism? Now see, in 1995, developing countries were not satisfied with this special agricultural safeguards. They did have the right to they did have the right to increase the import duty on certain products if the imports increase. But what did the developing countries say? Developing countries said that these developed countries have been giving their farmers too much protection for too long. Too much protection for too long, which is why it is important that developing countries get more protection under WTO. And this is why, when in 2001 we had another ministerial conference, the developed countries put up something called as the Doha Development Agenda. And in that, one of the agenda was developing countries getting a special safeguard mechanism wherein only developing countries will have the right to increase import duties in case imports increase beyond a certain level. Why? Because if the imports increase beyond a certain level, our domestic farmers would suffer. And we do not want our domestic farmers to suffer even for a single year, because if they suffer even for a single year, it will impact the total production next year. I hope this is clear till here, guys. So, this is what was happening here. Now see, so this is what was special safeguard mechanism. Now, what is the problem in this special safeguard mechanism as of now? And this was highlighted even in the MC13 that was recently concluded. The problem is developed countries are saying that you do not, I don't have any problem in developing countries having more. I don't have any problem in developing countries having more import protection, but I do have a problem in when do you want that protection to kick in. So when do the developing countries want that protection to kick in? Developing countries are saying that I want this protection if the import value increases by 10%. Developed countries are saying that I want these import protection if you should get this import protection if the imports increase by 40%. And this is the deadlock between finalizing this special safeguard mechanism, which has been pending since last 20 odd years. So this is what is the problem of special safeguard mechanism. All right. Now let's shift our focus to what are these export subsidies. Now see, under the Agreement on Agriculture or WTO as a whole, WTO prohibits any subsidy that you give specifically for exports. It prohibits any subsidy specifically for exports. Why? Because it says that you are distorting the international trade. Because let's suppose if China is giving export subsidy to export rice, India will also start giving export subsidy to export rice. Let's say Brazil will also start giving export subsidy to its companies to export rice, which means in the international market, firms are competing not based on their own competitiveness, but because of the support that they are getting from their respective government, which is why WTO specifically bans all the export subsidies. And this is not only limited to the agricultural products, it also extends to other products. For example, this is why, if you would recall, recently special economic zone policy was also held WTO violative. Merchandise export from India scheme was also held WTO non-compliant. And it is in this context that agricultural export subsidies are also banned or they cannot be given. And this was talked about in 2015 Nairobi package. In this Nairobi summit, it was said that in a phased wise manner by 2023, all members need to do away with their export subsidies that they give to the farmers. So India exports around 31 items to more than 200 countries, and in those we do used to give a lot of subsidies. So in 2023 we had to phase this out. So an obvious question should come to our mind is, since we have to phase this out, what did we do? Since we had to phase this out, what did we do to overcome this challenge? So if you would remember, we came up with a foreign trade policy 2023, and in this it has 4 pillars. One of those 4 pillars is from incentives to remissions. From incentive to remissions. What is this incentive to remissions? So initially we used to give incentives to the exporters, which means if you export more, you will get more incentive from us. So if you export 10 units, you will get incentives worth 10 units. If you export 15 units, you will not only get incentive for 15 units, you will get incentives worth 20 units. So there was a differential payment system. That is why more you produce, more will be your incentives, not proportionally, but disproportionately more. So for example, if you produce 10 units, you will get export incentive for 10 units, but if you produce 5 extra, you will get paid for, let's say, 8 units extra. So there was a differential payment that was happening. So this was the system in incentives. But from that, we have turned into remissions. This is refund or rebate. So there are 2 ways how we can compensate the firms. One is directly give them money when they are exporting. Second is get them assured that whatever inputs they are getting, it will be refunded when they have really exported it. Now, remissions are WTO proof. Can you name one such policy which is based on remissions? Can you tell me one such policy which is based on remissions? It was launched recently only. One such policy which was based on remissions, it was launched recently only. Yes, RODTEP, correct. RODTEP. No, not PLI, Khushi. PLI is Production Linked Incentive Scheme. RODTP is the one that we are referring to. Okay. So RODTP is the one that we are referring to. So that is what we are saying, that from incentives we have now gone to remissions. And this is the same thing that we have also applied in the 2018 agriculture export policy. So now we are planning to increase our exports through infrastructure, backward forward linkages, etc. So this is how we are dealing with the Nairobi package. I hope things are clear till here. If things are clear, then we need to move to the domestic support. We'll take 2 minutes if there is any doubts, guys. Full form of RODT. Remissions on duties and taxes paid on exported products. All right, Shivani. Any other guys? SSM, Special Safeguard Mechanism. Remission is refund, guys. Remission is refund. So this is Uruguay round, guys. This is Uruguay round that started in 1986 to 1985. Yes, free trade agreements, FTAs, are approved by WTO because, again, WTO talks about minimum level of free trade. FTAs are about freer trade. Chalo, let's move on, guys. So now let's shift our discussion to the domestic support. Domestic support means what are the types of various subsidies that the government can. What is the different types of subsidies that the government can give? Now, there can be 2 types of subsidies that the government can give. One is either it is impacting input and output prices directly, or it is not impacting input and output prices. For example, if we are giving cheap fertilizer, which means we are directly impacting input prices. If we are giving them cheap electricity, that also means that we are directly impacting input prices. Can you tell me a policy which does not impact the input prices directly, input or output prices directly? Can you tell me some subsidy that the government gives that do not impact input or output prices directly? Very good. PM Kisan, Fasal Bima Yojana, very, very good. Insurance, very, very good, guys. Now see, it is in that context that now let's try to understand what is this domestic support. Kalia, very, very good. Now, so now see, the subsidies that we give, either they can be trade distorting or they will not be trade distorting. This is non-trade distorting. And these are trade distorting. Now, trade distorting, such as amber box subsidies, these can be product specific. These can be product specific, such as MSP. MSP is given announced for 22 crops and it is applicable for 24 crops. Or it can be non-product specific. Or it can be non-product specific, such as fertilizers. Or let's say we can also talk about electricity. We can also talk about electricity. So all these types of subsidies are amber box subsidies. Now, what are these blue box subsidies, guys? See, blue box subsidies are those subsidies which are trade distorting, but additionally they ask that the farmer should also limit the production. For example, in India, we do not have any blue box subsidy as such, but a hypothetical example would be if MSP was given only if you produce up to 5 kgs, which means if you produce beyond 5 kgs, you will not receive any MSP. That would have been the hypothetical example of a blue box subsidy. In India, we do not have that, but such type of subsidies, although they are trade distorting, their trade distortion impact gets limited because the production is limited. Since the production is limited, therefore the market will not be oversupplied with such products. And that is why blue box subsidies, although they are trade distorting, but they additionally limit production by farmers. I hope you understand what is trade distorting. So these trade distorting subsidies are those which impact input or output prices directly or indirectly. Now see, and it is in this context that let's try to understand what can be the examples of green box subsidy. Green box subsidy can be, for example, crop insurance. So a crop insurance such as PM Fasal Bima Yojana, PM Fasal Bima Yojana, crop insurance is not a trade distorting subsidy. Why? Because it does not impact input or output prices directly, or it does not impact input or output prices directly. So for example, just because you have an insurance, just because you have an health insurance does not mean that you would simply go and bump yourself somewhere. If you have a life insurance, does not mean you will go at the top of your building and jump from there just because you have life insurance. Life insurance or insurance does not impact the production. It just acts as a safety net. If it fails, then it acts as a safety net. Just because you have insurance does not mean you will overproduce or you will underproduce. I hope this is clear till here, guys. Then let's try to understand, apart from crop insurance, for example, other thing that can be there, such as income transfer. Income transfer, such as under PM Kisan. Now this PM Kisan, why is this not impacting input or output prices directly? Because under PM Kisan, 6,000 rupees per hectare per year are transferred irrespective whether you produce something or you don't produce something. So even this PM Kisan is not linked to your production. At the same time, research and development. Research and development expenses that a government incurs that does not impact input or output prices directly. Yes, indirectly it can impact. So green box subsidies are those that impact indirectly. But these are which impact input output prices directly. I hope the difference between trade distorting and non-trade distorting subsidies is clear, guys. If there is any doubt, please ask. Infrastructure investment is green box. Yes. Warehousing, very, very good. If you go for warehousing, blue box example, Vivek, we don't have a blue box example practically, but if we had to have a hypothetical example, suppose MSP was being given if you produce less than 10 kgs. Okay. So we don't have a practical example of blue box subsidy in India, but a hypothetical example would be that electricity subsidy is being given if you produce less than 100 kgs or less than 10 kgs. That would be a example of blue box subsidies. Yes, Akash, we can include that. Amber box. Amber box means those subsidies which are trade distorting and do not ask us to limit production. Chalo. In that context, now see, under the WTO, government can give as much support to the green box. So in this, no limit on government support. No limit on government support. It can spend as much money as it wants. So for example, government can spend as much money as it wants on crop insurance, on PM Kisan. But under amber box, there has to be a limit. And what do we call that limit as? We call that limit as de minimis limit. Under blue box, now see, since they are trade distorting, but they ask the production. That is why, again, under blue box, no limit on government expenditure. No limit on government expenditure. I hope things are clear till here, guys. So under amber box, there has to be a de minimis limit. My next question to you is, can you tell what is the de minimis limit? What is the limit of developing countries under amber box? What is the limit of developing countries under amber box? Very good. So for developed countries like US, the limit is 5% of their total production value, and for countries like India, the limit is 10% of their total production value. So, and these prices are based on 1986-88, the time when Uruguay round had started. I hope this is clear till here, guys. If this is clear, let's try to understand few of the questions. So, various subsidy boxes we have seen: amber box, blue box, and green box. What is the de minimis limit? For developing countries, it is 10% of AMS, and for developed countries, it is 5%. What is Nairobi package? We need to limit export subsidies. We need to eliminate export subsidies. And what is the special safeguard mechanism? This is under market access that the developing countries want, that they should be able to import, they should be able to levy import duty to restrict market access in case of high imports. Now let's shift our discussion to what is peace clause. Now see, let's try to understand what are the issues in the domestic box. Now in this domestic box, both the types of countries have some or the other issue. Some issue is there for the developed countries, and some issue is there for developing countries. Similarly, in amber box, developed countries have some issue and developing countries have some issue. Let's try to understand what is the issue. Now, under developed countries, what do the developed countries have a problem in amber box? See, developed countries say that the developing countries frequently cross their de minimis limit. Frequently cross their de minimis limit. Frequently cross their de minimis limit. And that is why developing countries need to restrict it. Developing countries need to restrict. Now, what do the developing countries say? What do the developing countries say? Developing countries say that they need to give this subsidy because these subsidies are important for their food security. So, for example, MSP. We say that we have to give MSP because we need to support our farmers and ensure a normal food supply. We need to give MSP because we need to support our farmers and also ensure food security. Tell me, guys, is government support under public stock holding? Is it allowed? Is it allowed under the agreement on agriculture or not? Which type is support for public stock holding? Is it in amber box or is it in green box, guys? Is it in amber box or is it in green box? Very good. So, public stock holding for food security is in green box or is it in amber box? See, all of you make a mistake that it is in amber box. Please make sure that it is in green box. It is in green box because procurement is allowed at market price. Procurement is allowed at market price. It is a green box subsidy. Public procurement for stock holding purposes for food security is a green box subsidy. It is a green box subsidy as long as the procurement is happening at market price. But what is the problem in India? That the market price, we are not procuring at market price, but we are procuring at administered prices. And what is the administered price in India? MSP. Got it till here? I hope this point is clear, guys. I hope this point is clear that the green box subsidy, although public stock holding is a green box subsidy, but still it is a problem because the procurement is not happening at market price, rather it is happening at administered price, which makes it contravene to the green box subsidy, and that is why it gets included under amber box. Now, for this, solution had to be found, and in 2013 we had Bali Summit. In 2013 we had Bali Summit, and in that a peace clause was signed. And what was this peace clause? This peace clause meant that no legal action can be taken against the developing countries unless a permanent solution is found. No legal action can be taken against developing countries unless a permanent solution is found for this problem. And that is what is peace clause. And since 2017, it has been extended indefinitely. Even in the recently concluded, it has not been found. Our first issue is clear. Now let's try to look at what is the issue that developing countries say. Developing countries say that the developed countries have been very clever. How? Because they have included all the subsidies that the developed countries give under green box subsidy, which means they can continue to give the subsidies that they have been giving, but developing countries need to restrict their subsidies. Got it clear? So developing countries What type of subsidies do we give usually? Most of our subsidies fall under amber box. But for the developed countries, they have been smart since the starting, and they made sure that whatever subsidies they have been giving, they fall under the green box subsidies. And that is the problem that developing countries have with green box. Now let's try to understand what is the issue in amber box. Again, in the amber box, the developed countries have that problem only, that the de minimis limit gets breached. De minimis limit gets breached. And what do the developing countries say? Developing countries say that developed countries have been very, very clever. How? See, the aggregate measure of support. At what prices has it been fixed? 1986-88 prices. At what prices has it been fixed? 1986-88 prices. And due to that, 1986-88 is the time when developing countries like India and others were not very resourceful. We have become resourceful only in the recent years. And it is only in the recent years that we have started incurring more expenditure on agriculture, but we are not able to spend that. Why? Because we often cross 10% AMS. At the same time, the developed countries had been resourceful, so their 5% of AMS is still high than our 10% AMS. For example, it is just like saying that the expenditure by Ambani has been limited at 5% and the expenditure of us has been limited at 10%. Even if Ambani's expenditure is limited by not increasing by 5%, 5% expenditure of Mukesh Ambani will be more than our 10% expenditure. So developed countries have a higher expenditure limit compared to developing countries, even if it is 10% of AMS. I hope this point is clear, guys. So these are the 4 issues that we face in the domestic support. So developing countries, what is the problem that they have? Higher limit for developed nations as expenditure was more in 1986-88. So these are the 4 issues that we have in domestic support. I hope this is clear, guys. So what is the point 2? Green box. The problem with the green box that developing countries have is that the developed countries have been very clever in including all their subsidies under green box, and the whatever subsidies developing countries give, that is there under amber box. So that is what is the 4 issues. So if we collate all the issues, the total number of issues that we have with WTO is 1, 2, 3, 4. 5 is export subsidies, and 6th is SSM mechanism. So whenever asked about the agreement on agriculture, these are the 6 points that you have to write. In that context, let's try to understand this question. Take 10 seconds, try to answer this question. Let's try to understand this question. I hope you're not seeing it from the PPT that you already have. Now see, so consider the following with reference to amber box subsidy as per WTO agreement on agriculture. Subsidy on fertilizers. Which type of subsidy is this, guys? This is non-product specific amber box subsidy. This is non-product specific amber box subsidy. So this is a amber box subsidy. Rebates on interest rate. Yes, this is also an amber box because it directly impacts input costs. It lowers input cost. Research and training, this is not an amber box, this is green box. So the answer has to be B for Bangalore. I hope this is clear. Poll, how do we start a poll? Guys, I did ask how to conduct the poll, but that person was not available today. So he could not, the technical guy could not tell me that today. From next time, we will do that. So, loan waiver is not a green box subsidy. Loan waiver is an amber box subsidy, guys. That expenditure is under amber box. Now see, with reference to agreement on agriculture, consider the following points regarding the peace clause. Under the peace clause, WTO members agreed to refrain from challenging any breach in the prescribed ceiling limit by a developing nation. This is true. That is why it is called peace clause in the first place. Then, India has never invoked this peace clause. It is false. We have invoked it multiple times, and even in recently, we invoked this clause. This clause will stay permanent unless a permanent solution is found to the food stockpiling issue. Yes, this is also correct. So the answer is C for Chennai. Got it till here, guys? So just to sum up, what is the issue with MSP? When you see, there will obviously be certain domestic issues. What are the domestic issues? Non-targeting of other crops beyond rice and wheat, the only 6% farmers benefiting, FCI incurring huge losses, procurement also is limited to rice and wheat. At the same time, fruits and vegetables are not included. That is why potato, onion, tomato prices keep on rising and falling. But let's try to focus on the international issue that is the current point of discussion. Internationally, it has two problems. First is that it is an amber box subsidy, and the second is it is the administered price. It is the administered price for public stock holding, and which is allowed for public stock holding, guys. Administered price or market price? Which type of price is included? Market price is a green box subsidy. Please keep that in mind. That can be a very, very predictable question. You guys are often confused in this. Food public stock holding for food security purposes is a green box subsidy. But yes, the procurement needs to happen at market prices. By the way, why? Why do you think is it so that they have allowed this food security, but the procurement needs to happen at market prices? What is the problem with administered prices, guys? What is the problem with administered prices? Low prices, no, because the market price can also be high, so that is not the problem. All right, no, that is not the reason. No problem. Let's try to understand. See, that is because food security is being viewed differently by developed and developing countries. Food security is being viewed differently by developed and developing countries. And how so? So, food security is being viewed differently by developed and developing countries. How? For developing countries such as India, food security includes both consumers as well as farmers. That is why we are giving them minimum support price. But for the developed nations, food security only includes consumers. That is why for public stock holding for food security purposes is allowed, because they want to protect the consumers. Even they want to protect their consumers, but they do not include producers or the farmers within the ambit of their food security. For developed nations, food security means food availability. For us, food security means food availability plus income security of the farmers. I hope you got the difference, guys. I hope You got the difference, guys. So for developing nations, it is consumers plus producers. But for developed nations, it is only consumers. That is why they have allowed food public stock holding. Otherwise, why would they allow public stock holding if they were against any such procurement by the government? I hope this is clear, guys. Please do try this question, direct and indirect. This is talking about green box and this is talking about amber box. What are the direct and indirect subsidies provided to the farm sector in India? Discuss the issues raised by World Trade Center in relation to agricultural subsidies. So here you need to write about export subsidies also. That is the only mistake that you can make. Don't limit your answer only to domestic support. You have to include domestic support as well as export subsidies. The market access point you can afford to ignore here. So amongst the three things, the question is asking about export subsidy and domestic support. Market access, the question is not asking about. I hope this topic is clear, guys. Let's move on to the next topic. Administered prices is not allowed, Akash, because the administered price is government interfering in market forces. Administered price is government interfering in market forces, and the WTO wants market forces to be let off by the government. No government intervention in the market forces. Please provide today's PPT link. All right, Akash. All right. Any other issue, guys? PM Krishi Sinchai Yojana. See, under PM Krishi Sinchai Yojana, Femina, what is happening? It is government is directly subsidizing the cost of irrigation, which means it becomes a direct subsidy which is being given to non-product specific amber box subsidy. Okay, Femina? Anything else, guys? Nairobi. Palak पिछला देख लीजिएगा, please. Chalo. Let's move on. Let's try to understand what is this green rupee term deposit. Now see what has happened in January 2024. In January 2024, RBI released certain PM Harihara PM Kusum is for solar. It is not related to agriculture. It does not relate to agriculture. Now see, let's come back to SBI green rupee term deposit. Now recently what has happened is SBI in January released its guidelines so that people can come and have something called as green rupee deposit or green deposit scheme. It is in that context that let's try to understand what is this green deposit. Now see, this green deposit is a subtype of something called as impact investing. Now, what is this impact investing? Now, see, so far, whenever we have been investing in the companies, our main motive so far has been only profit. Our main motive so far has been only profit. And recently, what has started happening is that many investors have been saying that you are investing in companies which may or may not be environment friendly or socially friendly. For example, tobacco industry. Socially, it is a polluting industry. How? Tobacco is not considered as good for society. It is considered as a sin good. Alcohol or even airlines. These are also polluting industries. Coal industries. All these are polluting industries. So few people came together and they started a movement in which they said that yes, making money for profit is good, but let us try to have an impact through this investing. So we will invest in certain projects which will have a good outcome on the society, For example, people can invest in a company which takes care of orphans. People can invest in a company which is a recycling company. So everything will be the same. They will still look for profit, but profit will take a second seat. And another motive that gets added is how much impact it is making on society and environment. And that is what we call as impact investing. In fact, recently we also came up with elephant bonds. We also came up with certain bonds which would help educate the women children. It's in 2018, 2019. So this impact investing has been there in news for quite a while. And this is what we call as, you must have heard something about ESG norms. Can you tell me the full form of this ESG norms or ESG investing, guys? Very good, Harihara. So environment, social and governance. So ESG norms or in ESG investing refers to a type of investing where people invest in those companies which are environmentally friendly, which have a good social impact, and which also have good governance structure. Very good, Femina. Very good, Palak. Yes, Ruchita. Very, very good. Now see, so this is what is impact investing, and it is in this context that we need to understand what have we here. Green rupee deposit. Try to take a wild guess. Whatever deposit will come under this scheme, for which purpose will it be used, guys? For which purpose will it be used? Will it be used for helping women? Or will it be used for helping environment? Correct, it will be used for helping environment. So what is ESG? Environmental, social and governance. Got it till here, guys? Let's now dive a little deeper into what has happened. Now in April 2023, what happened is RBI came up with certain guidelines on these green deposits, and it is after that that SBI came up with a green deposit scheme in 2024, and recently, I think yesterday or day before yesterday, even Bank of Baroda has come up with its green deposit scheme. Now what is this green deposit scheme? Green deposit means it is just like a fixed deposit. It is just like a fixed deposit. Just a condition is there on the bank that the money given under green deposit has to be used only for impact investing in the projects that have green impact on the environment. They are trying to produce either lesser carbon footprint, or they're trying to have more afforestation, soil reclamation, whatever the scenario be. Renewable energy also very good, guys. The only catch that you need to be aware, and where the question can also be asked, is that green deposits can only be in INR. And who all can invest? Residents can invest, as well as even NRIs can invest in green bonds, but they can be invested only in Indian rupees. This is the catch as of now, guys. Okay, so this is very important. And REs or regulated entities have to issue cumulative and non-cumulative green deposits. Now, what is this cumulative and non-cumulative green deposits? Cumulative and non-cumulative means that either the interest can be given if interest is unpaid in a particular year, either it can be left unpaid or it can be accumulated and can be paid next year. Can you tell me, have you heard something called as, just an current affair question, have you heard of something called as non-cumulative, non-redeemable preference, non-cumulative, non-redeemable preference shares? Do Google it up. It is very much in news. You will get this news by the name of AT1 bonds. Often it is in news. Okay, so do Google it up. If at all it comes in the news, we will try to discuss in the next webinar. Anyway, let's come back. Now see, another thing that you need to understand is that the SBI has come up with the green bond framework, which is based on the green bond standard version. And who has been it released by? It has been released by Climate Bonds Initiative. Now, what you need to understand is this climate bond initiative. Climate bond initiative is a private entity, and this is where they can also confuse you. It is not an intergovernmental body. It is not an intergovernmental body. It is an NGO. Okay, it is a private entity. Chalo, I hope this much is clear. Let's try to address the question. Now, to enable predictability, let's try to understand few questions about SBI Green Term Rupee Deposit. To enable predictability, no premature withdrawals are allowed for such deposits. Now see, this is just like a fixed deposit. This is just like a fixed deposit. Even in fixed deposit, premature deposits, premature withdrawals are allowed. So even under this green rupee term, premature withdrawals are allowed. Yes, there may be some penalty. So this is a wrong statement. Next, the deposits raised under the framework are covered by DICGC in accordance with the Deposit Insurance and Credit Guarantee Corporation Act. Yes, even this is true. Can you tell me what is DICGC? Can you tell me what is DICGC? So DICGC, what does this DICGC do? That is, suppose if you have 10 lakh rupees in Yes Bank and somehow Yes Bank collapses. If Yes Bank collapses, how much money will you lose? You will not lose entire money, but you will have 5 lakh rupees. Why? Because this ensures and guarantees that at least 5 lakh rupees will be saved. And if you have 100, or if you have let's say 1 crore rupees in Yes Bank and Yes Bank goes away, how much money will you still have? 5 lakhs. Okay, so DICGC guarantees deposits up to 5 lakh rupees for most of the financial institutions. Guys, tell me, does DICGC cover NBFCs? Does DICGC covers NBFCs? It does not cover NBFCs. Okay, it does not cover NBFC. This can be a very, very predictable question. So second is right. To enable foreign inflows, green deposits can be in foreign currency. This is the precise point. This is a wrong point. Why? Because it can only be in Indian national rupee. Got it clear, guys? So the answer is D for Delhi. Let's move on to the next. Now, direct tax to GDP ratio has risen to a 15-year high, which is a very, very important development. Let's try to understand what do we need to know in this. There are multiple things that we need to know. So, for example, we need to know what are the different trends, whether direct tax collections have been increasing or they have been decreasing in the recent past. What has been the tax buoyancy? All these terms can be asked, and every year there is a possibility that after the budget, every year there is a possibility that after the budget, some or the other issue would be there, some or the other question can be asked. Let's try to discuss these questions. So, few things you need to know. What has been the general trend so far? General trend. See, first trend was that for a very, very long time, indirect tax was greater than direct tax collection. Indirect tax collection was very, very greater than direct tax collection. But now it has changed. We will look into how has it changed. Another thing we need to look at, what is the relation between corporate income tax vis-a-vis personal income tax. That is the other relation we need to look at. Then we also need to look at increasing or decreasing order of type of taxes and collection, customs duty, excise duty, GST, all these terms we need to understand. Now see, first and foremost, please beware, you don't need to remember this data. Okay, you don't need to remember this data. You don't need to remember this data. Do not panic, guys. You don't need to remember this data, only the analysis that we are supposed to do. I've given these numbers so that you understand few things that I'm trying to point out. Now, let's start to understand what is the various trends that are emerging. That can be a possible question because any change in trend is a possible question. So, for example, look at the corporate income tax and personal income tax. Corporate income tax has been usually greater than personal income tax. It has been usually greater than the personal income tax, but in the latest data, personal income tax is greater than corporate income tax. Okay, personal income tax is greater than corporate income tax. So that is the first thing that you need to remember, that this year personal income tax is greater than corporate income tax. So tell me, is this the right statement that in the last 5 years corporate income tax has been greater than personal income tax? Is this a right statement or a wrong statement, guys? Correct. So that would be a wrong statement. Okay, no Shriman, that would be a wrong statement. Okay, because as you can see in 2020, in 2021 and in 2022-23, personal income tax has been greater than corporate income tax. So this is one thing. Then the other thing, you don't need to worry about all this. You don't need to worry about all this. Then there is something called as tax buoyancy. There is something called as tax buoyancy. What is tax buoyancy, guys? What is tax buoyancy? See, usually what we would expect that if GDP is increasing by 1 unit, even tax collections would increase by 1 unit. Usually what would we believe? That if GDP is increasing by 1 unit, even the tax collection would also increase by 1 unit. That is why a tax buoyancy factor of 1. Should tax buoyancy factor be less than 1 or greater than 1, guys? Tell me, should tax buoyancy factor, should it be less than 1 or greater than 1, guys? Try to understand. Should it be less than 1 or should it be greater than 1? Very, very good. Few right answers, few wrong answers, but nonetheless, good participation, guys. Now see, if tax buoyancy is less than 1, what does it mean? It means that if GDP has increased by 10 rupees, tax collection has not increased by 10 rupees. Tax collection has increased by less than 10 rupees. We are talking about increase, not the absolute number. We are talking about increase, not the absolute number. So, tax collection, we would expect that if GDP is increasing, tax collection would increase even more. So, a tax buoyancy factor of more than 1 is very, very desirable. I hope this is clear, guys. So, tax buoyancy, what is tax buoyancy? It tells us how much the tax collection increases for every unit of increase in GDP. So, tax buoyancy factor, as you can see, in the recent past, it has decreased. From last year, it has decreased. In 2020-21, we did not calculate it. And if you will see, in 2019-20, it was negative. Because towards the end, the tax collections decreased. I hope this is clear to you, guys. Let's now look at few trends that have emerged after this year's budget. So the first thing that you need to know is direct tax collection is more than indirect tax collection. For a very, very long time, that direct tax collection was less than indirect tax collection. And that is why our system, our taxation system was being called as a regressive system. Now, what is a regressive taxation and what is a progressive taxation? See, regressive taxation. This principle is based on the principle of equity. Normally, a taxation system has to be equitable. Now, what do we understand by the term equitable? What do we understand by the term equitable? Equitable means to each their own. So, for example, a progressive taxation system would be one where the rich are paying more taxes and the poor are paying less taxes. And a regressive would be the one where poor are paying more taxes and rich are paying lesser taxes. So, let's try to take an example. Income tax. If your income is 10 lakh rupees, you will pay certain amount of tax. If your income is 50 lakh rupees, you will pay higher amount of tax, higher rate of tax. But what about tax like GST, which is an indirect tax? What about tax such as GST, which is an indirect tax? If we are doing some purchase, if your income is, let's say, 50 lakh rupees, my income is, let's say, 10 lakh rupees, I'm also paying 18 rupees as tax, you are also paying 18 rupees as tax. So for 18 rupees, if my income was, let's say, 100 rupees, your income was 1000 rupees, this 18 rupee tax that both of us have paid, 18 rupees forms a larger proportion of tax for me because I am paying 18 rupees tax out of 100 rupees. You would be paying 18 rupees tax out of 1000 rupees. So you are paying lesser proportion of tax. I am paying higher proportion of tax even if we are paying the same nominal amount of tax. So that would be a regressive taxation system, which is why if in any economy indirect taxes are high, that system is considered as a regressive taxation system. Got it till here? So that is what is changed because since direct taxes are high, Indian taxation system can be categorized as a progressive taxation system. Then another important point is that the number of taxpayers has also increased. We now have around 7 crore taxpayers, which means our tax base is also increasing. Okay, our tax base is also increasing. So this can also be a statement. However, we do need to understand that our tax base is still quite low because hardly 3% of population pays income tax. Hardly 3% of population pays income tax. In fact, there is a very famous statement by one of the previous RBI governors that there are more Mercedes on Indian roads than taxpayers. That's a very famous statement that was made by one of the previous RBI governors. So in either case, for prelims, what is important is that number of taxpayers has increased. Other thing that is important is cost of tax collection has decreased as a percentage of total tax collected, but it is the highest nominally. Let's try to understand what is this tax expenditure. What is this cost of tax collection? Also, since we have come across this term, do tell me in the comments section what is tax expenditure. Do tell us in the comment section what is tax expenditure while we try to discuss what is cost of tax collection. Cost of tax collection is nothing but the expenditure that is incurred by the government in collecting taxes. What does that include? Salaries of the employees, the legal costs that are included. All those costs are the cost of tax collection. So even that has decreased, but as a percentage of total tax, but it is highest nominally. Okay, so we have spent more on increase on collecting the tax, but this is not a problem. Why? Because we ended up collecting more taxes. I hope this point is also clear. Now let's talk about what is tax expenditure. So tell me, is this tax expenditure What is this tax expenditure? Expenditure incurred out of collected taxes or is it tax income foregone due to rebates? And this is a very common problem that you face. Please be aware that the answer is the second, it is not the first. Tax expenditure, obviously, this is a bogus statement A, and tax expenditure is definitely not the cost of collection of taxes. I hope you got this point, guys. So these are very, very two important points that you need to remember. Now, let's talk about the fifth one, which is tax buoyancy. Now, what is this tax buoyancy? Tax buoyancy should be greater than 1 or less than 1. We have already discussed tax buoyancy should be greater than 1. And this has been the tax buoyancy in the recent years. As you can see, from the last fiscal year, tax buoyancy has decreased. Okay, from the last fiscal year, tax buoyancy has decreased. So these are 5 points that are very, very important for this year's prelims. Let's try to answer few questions. With reference to the total tax collection in India, consider the following statements. The share of direct tax is more than the share of indirect tax in the total tax collection. This is a right statement. Okay, this is a right statement. Because why? And this is what makes our taxation system as progressive. This is what makes our taxation system as progressive. Then the share of goods and services tax is more than corporate income tax in total tax. Now see, most of the indirect tax is GST. Most of the indirect tax is GST. So usually it is GST, then corporate income tax or personal income tax, whichever is higher. But here GST is CGST as well as SGST. If we have to talk about CGST, CGST will make it after corporate income tax or personal income tax. Please remember in the question what they are asking. Are they asking about the total GST or are they asking about CGST? I hope this point is clear, guys. Corporate tax in India has been provided under Income Tax Act of 1961. C is the right answer. Then OGST. OGST. I've heard of IGST, but what is OGST? New tax, Femina. IGST, just look at the collection. I don't remember all the facts, but this is no problem, Femina. So this is very, very important. Is this the first time direct tax is more than indirect tax? No. A few years back also this happened, guys. Okay, Saurabh. Chalo. So please remember this concept. Let's look at the next question. Try to tell us this, guys. What is the possible answer for this? So we all already know that GST is greater than corporate income tax. So 2 is greater than 1. So either it can be C or it can be D. Either it can be C or it can be D. Now what is this excise duty and customs duty? Excise duty is levied on manufacturing. Manufacturing, such as manufacturing or producing. In fact, can you tell me on what all products is central excise duty still levied? On what all products is central excise duty still levied? On what all products is central excise duty still levied? Now see, this got subsumed under CGST. This got subsumed under CGST, but still on certain products it is levied, such as alcohol and petroleum products, which are very, very important. Which is why often the controversy also comes, with respect to the tax on petroleum. In fact, after the COVID, this was also a problem that both these state government as well as the central government got into a quarrel that center is not decreasing taxes, and then after the petrol cost increased to 100. This is about 2021-22. So in either case, please remember that GST is greater than corporate income tax, and please remember customs duty is more than excise duty. And why is that? Because the excise duty is now levied on lesser number of products, but customs duty is levied on more number of products. Tell me this one thing. So obviously the answer would be D for Delhi. Tell me this one thing, guys. Have you heard of something called as e-commerce moratorium in WTO? What is this e-commerce moratorium at WTO? If this moratorium is removed, which of these taxes will increase immediately? Which of these taxes will increase immediately? Which of these taxes will increase immediately? It is customs duty. Do Google it up, guys. Okay, do Google it up. Very, very good, guys. Sujit, Kushi, Chituri, Vaishnavi. Very, very good, guys. Chal. Let's move on to the next question. Now, see, in the last 5 years of the union budget, what we have seen, a continuous increase. See, direct tax collections and GST collections have dipped due to pandemic. Due to pandemic, they have been erratic. So this is a wrong, but revenue expenditure has consistently increased, such as subsidies, interest payments, all these have continuously increased. So that is what is the answer is D for Delhi. I hope this is also clear. Now let's talk about a very, very important topic, GIFT City and International Financial Services Centers in India. Now try to understand what do we even mean by financial services? What do we even mean by financial services? What do we mean by financial services, guys? Anybody? What all do we mean by financial services? Yes, Chittori, GIFT Cities in Gujarat. So financial services can be of multiple types. For example, financial services, a company may need services with respect to mergers and acquisitions. A company may need certain help regarding mergers and acquisition. TCS may want to go and acquire some company in US, or raising debt externally. Raising debt externally. So, for example, for a very, very long time, the interest rates in US were very, very low, around 0 to 2%. So, and in India, the interest rates were around 7 to 8%. So, even if you accounted for the currency depreciation, it was profitable to take loans from foreign banks. So, even that debt externally, raising the debt externally, is a type of financial services. Or coming up with IPOs, or capital market, even that is a type of financial services. So there can be multiple types of financial services. It is in this context that these financial services currently are getting located in certain business centers, and London, Dubai, and Singapore are dominating in providing these financial services internationally. So these have become a very renowned international financial services centers. I hope it is clear till here, guys. I hope it is clear till here. What are the financial services? Any doubts till here? Please ask. All right, Femna. All right, Jia. All right, Soumya. So let's continue with something that recently what has happened. Government has allowed direct listing of securities. And it is in this context that we need to understand few things. Now, what all is important for prelims? We need to understand what is a gift city, what are the various exchanges in gift city, what is rupee convertibility, and then we need to know what is and then we need to know what is direct listing, and then something about what is this IFSCA Act. Yes, Rishabh, tell me. Chalo. Now let's move on. And for the mains, this can be a direct question in mains, that what are the challenges for Gift City to becoming a global financial hub, and how can these be addressed? Let's try to understand these issues. Now see, this Gift City was established around 2006 2007, but the journey started even before that. When did the journey start? Now see, in 2005 we had a special emphasis on promoting the exports in India, and it is in that context that we came up with an SEZ Act. Now what is this SEZ Act? Special economic zones. Now what are these special economic zones? Under these special economic zones we used to give special concessions to all the firms that will be there. So, for example, any firm that is there in a nearby area which we categorize at a domestic tariff area and compare that with an SEZ. So, for example, if this is entire Delhi and this is, let's say, our Karol Bagh, Delhi would be a domestic tariff area. Delhi would be a domestic tariff area. Normal tax laws will apply here, but with respect to Karol Bagh, this would be declared as SEZ. All the industries coming here will receive special tax benefits, and their responsibility will be to improve exports. So this is what we started planning to do from 2005, and in this 2005, the SEZ Act had a provision for establishing multi-services center, and it is using this multi-services center that we are going to establish something called as the Gift City. Now see, try to understand the context of Gift City. In 2007, we had set up a Percy Mistry Committee. Now, what is this Percy Mistry Committee? This Percy Mistry Committee said that every year we would be having an outflow of around $125 billion for the services that our industries need. TCS, Infosys, and you need to understand that currently in 2024, annual FDI inflow is around $80 billion. In 2027, FDI inflow in 2007, FDI inflow was not even $30 billion, which means if we are giving out $125 billion by 2025 and we are becoming happy that we are receiving $80 billion, net we are losing $45 billion for the services that our businesses need. And it is in this context that we thought that we should develop financial services center of international standard even in India. Okay, it is in this context that we thought that we should also establish financial services center of international standard in India. And this is why in 2008 Gift City was established. But now see, when the previous government was there, they were not very much inclined because there were other priorities during that time. And what do we see is from 2007 to 2015, there were no guidelines. From 2007 to 2015, there were no guidelines. And that is why Gift City was not operationalized. But finally, when the new government comes, they have a urgency to establish India as an international financial service center. And even this Gift City, G stands for Gandhinagar. G stands for Gandhinagar, Gujarat, where our current Prime Minister hails from. And when the new government comes, they call up all the regulatory institutions, and it is then that we see RBI, SEBI, PFRDA, and IRDAI issuing guidelines for international financial services centers in India. Guys, who all are the regulators of financial sector in India? Who all are the regulators of financial sector in India? Please remember, often you write only SEBI, but there are others as well. There are 4 regulators of financial sector in India. Why don't you tell me who all are the members of Financial Stability Developmental Council? Why don't you tell me meanwhile what all are the members of Financial Stability Development Council, FSDC? Do Google it up, guys. That's a very important council. Now, from 2015 to 2016, multiple regulators existed. And it is then that we realized that if we have to achieve financial services center of international standards, we need to have a unified regulator. And that is when all the powers, relevant powers from these institutions were taken and given, enacted into a new law, IFSCA, International Financial Services Centers Authority. Please make sure Centers Authority, which means there is a plan to have multiple IFSCs, which means there is a plan to have multiple IFSCs. How many IFSCs do we have currently, guys? Currently, we have only one, Gift City. So currently, there is only one IFSC, but we are planning to have even more IFSCs in due course of time. And this is the context of passing the IFSCA Act. I hope things are clear till here, guys. If there is any doubt, please ask. If there is any doubt, please ask. Done? All right, guys. Now see, how does this Gift City function? How does this Gift City function? Yes, Lakshmi, Gandhinagar is in Gujarat. Now see, now try to understand what is the Gift City. Gift City is the first international financial service center. Okay, it is the first international financial services center, and just like any area, there is a domestic area, domestic tariff area, in which normal tax laws will be applicable, and then there is a special economic zone where other tax act with where other tax laws will be made. Now, in this special economic zone, many international banks have already set up. Now, what is the difference? Is there if they're in the domestic tariff area, HSBC is HSBC India, which means it is Indian branch. But if HSBC is in SEZ, or if HSBC is in the SEZ of Gift City, it will be treated as an international branch. It will be treated as international branch. It will not be treated as Indian entity. Fatima, mergers and acquisition means, so for example, Vodafone Idea, that was a merger, and some companies can also be acquired. TCS may acquire some company somewhere else. So mergers and acquisitions is a normal scenario that keeps on happening across various companies. All right, Vivek, I'll change the color. HSBC Bank for Anjali, Google that. Now see. So currently, this SEZ has two international stock exchanges and even one first international bullion exchange. This is what we need to discuss next. Now, what are the two international exchanges that are there in this? So we have two normal stock exchanges in India. We have two normal stock exchanges in India, National Stock Exchange and Bombay Stock Exchange. So it was the National Stock Exchange that first came up in the Gift City, and National Stock Exchange set up India's first IFSC, which we call our National Exchange India INX. And then later, Bombay Stock Exchange also comes up and establishes BSX. So currently in India, we have two international exchanges. What are those two international exchanges? INX and BSX. Now, how are these exchanges different from the exchanges that we have currently? Try to take a wild guess, guys. How are these international exchanges different from the exchanges that we have currently? So, for example, tell me, can we, as of now, invest in the shares of Apple and Google? Can we, as of now, share in stocks of Apple and Google? Can we invest in shares of Apple, Google? See, we can invest. So you must have heard about certain apps like IndMoney, and all these apps have been coming up under what? Liberalized remittance scheme. This is the RBI scheme. Do tell me which year was it released? Under liberalized remittance scheme. Do tell me under which year was it released? Liberalized remittance scheme. And under which act? And under which act? And under which act? Now see, but there is a difference. Even though we can invest in the shares of Apple and Google, even though there is a difference, even though we can invest in the shares of Apple and Google, we do not have those shares in our demat account. Some broker in US keeps those shares with themselves for us. We don't have those shares in our demat account in India. So if something happens to that broker, if that broker goes bankrupt, we do not have any dispute resolution from India. We have to depend on the dispute resolution from outside. So for example, when we have a demat account through Zerodha, Zerodha is an Indian company and Indian tax laws would be applicable. And it is in that context that we need to understand that with Zerodha, shares are in our demat account. But right now, when we invest through liberalized remittance scheme, shares are not in our demat account. we indirectly hold those shares. Shares are with the broker itself. But under under international exchange, you can directly own shares. You can directly own shares of Apple and Google. Okay, so that is the difference between how we would invest in the other companies and how would they invest in our companies. Even if currently, if they want to invest in our companies, they have to also own it indirectly, like we own it. Like we own it indirectly, even they own our shares indirectly. But under this, each of us can own the companies of shares of companies of each other directly. I hope this basic difference between a domestic exchange and international exchange is clear, guys. All right, guys. So, and now to answer that question, when was this liberalized remittance scheme brought? So, in 1999, we came up with FEMA, and in 2004, RBI came up with liberalized remittance scheme. This scheme was in news in the recent past. Do Google it up. Now, try to understand that there has been recently NFSC and IFSC and Singapore. So there has been a collaboration between NSE from India and Singapore to trade nifty derivatives or to trade derivative instruments. So initially what used to happen, if anybody wanted to trade in Indian derivative instruments, they used to give their orders in Singapore and then Singapore used to transfer those orders here. But now all those orders would get directly routed to India. Initially, who was earning due to our derivative instruments? Singapore. Now who will earn directly? India. Okay, so that is one of the things that is going to change with this collaboration. Yes, GI, ADRs and GDRs also comes under this only. Now, another thing that we have recently done is having international bullion exchange. Now, you need to understand that this is first in India and third in the world. Now, what is the context of this India International Bullion Exchange? Now, see, try to understand that India is amongst the largest importers of gold. India is amongst the largest importers of gold, but we do not have any role in setting the price of gold. And that is where this IIBX, that is why this IIBX is being relevant. That is why this IIBX is relevant, because now all the gold that gets imported in India has to be routed through this exchange. Okay, it has to be routed through this exchange. And this will give us an edge over determining the prices. So, for example, just imagine that if the volumes were disaggregated, if the volumes were disaggregated. So, for example, imagine if coaching institutes all over the India are disaggregated. So one coaching will charge some other price, one coaching will charge some other price. So there will be no unity in charging the prices. Now imagine if it is being channelized through one place, there may be the coaching institutes may charge the same price, and similar thing will happen with something like this, because now all the traders of gold will come on one platform and they can decide what is the price they are willing to pay, and there will be no arbitrary costing of the prices. So bullion exchange, not all the countries have bullion exchange. This is the first bullion exchange in India, but third bullion exchange in the world. Do tell me in the comment box which are the other two bullion exchange. Which are the other two bullion exchange? So if all the gold is being routed through one place, we can have a better pricing strategy. And which is the largest bullion exchange of the world, guys? London Exchange. Anyway, do Google it up. What are the other two? One I've already told you. Now let's talk about what is direct listing. What is direct listing? Because that is what has been allowed by the government. Direct listing, that is why it is in news. We have looked at the other aspects as well, but direct listing is the one that we need to understand. Now see, what is direct listing? Now try to understand how can the firms raise money? How can the firms raise money? Firms can raise money through multiple aspects. Either they can raise money, firms raise money through multiple aspects. Either they can raise money through equity or they can raise money through debt. In equity, either they can raise money domestically or they can raise money externally. In domestically, they come up usually with IPOs if they want to have money from general public, if they want to get money from general public. Now what is the process of an IPO? Because that is where we need to also understand that how is this direct listing different from an IPO. Now see, how do the direct normal IPO process happen? So normal IPO process happens that the company, let's say Zomato, will contact an investment bank, let's say Kotak Mahindra Bank, and this Kotak Mahindra Bank will also be the underwriter. What is an underwriter? Underwriter says that if your shares are not sold, I will be the one buying those shares. But if your shares are sold, I will also charge you some commission. I will be the one who will market your IPO. I will be the one who will be talking to the investors. I will be the one who will be conducting the road shows. I will be the one who will be showcasing what all is there to offer in this IPO. And even if despite that, if your shares are going unsold in the market, I will be the one and I take this undertaking that I will purchase your shares. Okay, I will purchase your shares. That is what is an underwriter. So underwriter will charge a commission if the IPO is good. If the IPO is not good, if there are shares which are not subscribed, underwriter will purchase those shares. So this will charge some commission. And then finally, the shares are sold to the common public and are listed on the exchange. This is how normally listing happens. But companies can also go for direct listing. So, for example, Shopify, or not Shopify, Spotify. Spotify went for direct listing. I hope you would have heard about Spotify. So many companies have gone through the IPO route. Zomato, Facebook, Amazon. Many companies also prefer to go through direct listing route. So what is this direct listing route? Now under this direct listing route, what happens is usually under an IPO, new shares are issued. New shares are issued to raise money. IPO is issued so that the company may raise money. So people will subscribe to those shares and company will get some money. But under direct listing, what happens? Direct listing, the objective is not to raise money. Direct listing, old shares are sold to public. So these shares may be with the early investors or these shares may be with the employees. These shares are sold to the public and the objective is not to raise money, but it is to create a market for its shares. It is to create a market for its shares so that there may be some place where its shares can be traded and sold or purchased. So the objective is not to get money, because in IPO, when the company is releasing new shares, company is getting the money. But under this, investors, employees, they are the ones selling off their shares, and that is why they are the ones getting that money, not the company. So under direct listing, what happens is there is usually no underwriter. There is usually no underwriter. No underwriter. Therefore, this process of getting the shares enlisted is cheaper. And that is what Spotify went for. Amazon, Zomato, Facebook, all these went for IPO because they wanted money for their growth expansion. Direct listing does not happen because the company wants the money. It happens because it just wants people to start trading in its shares. Sometimes it helps in better price discovery of its shares. So that is what is direct listing, and that is how it is different from IPO. And even that has been now allowed under the gift city. Okay, that has been allowed under the gift city. So I hope this is clear. What is the gift city? It is the first IFSC in India. Various exchanges, we know that. One is being set up by NSE, other is set up by BSE. And is there full convertibility there? Yes, you need to also know that in the SEZ, only non rupee transactions happen. Only non-rupee transactions happen in SEZ. Okay, only non-rupee transactions happen in SEZ. What is this non-rupee transaction? So tell me, is rupee partially or fully convertible in gift city? Is rupee fully or partially convertible in gift city? In gift city. I hope you understand what do we mean by convertibility. No, it is not about what is happening in Kerala. What is convertibility? What is convertibility? See, convertibility is how easily one currency can be shifted to other currency. Current convertibility is how easily one currency can be converted into other currency. For example, what used to happen before 1991? Before 1991, we had very restricted convertibility. We had very restricted convertibility. Now let's try to understand what is this convertibility. So for example, if let's suppose before 1991, some Ambani got married. Which one? Take a wild guess. Any Ambani got married. Now that Ambani goes to RBI and says, so RBI, I recently got married, so I wanted to go on my honeymoon. Very good. Go enjoy. No, no. So I wanted to go to Switzerland. Why don't you take these Indian rupee and give me one of those Swiss currency? I have heard that the Switzerland is very, very good. RBI. अच्छा 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 तेरे को स्विट्जरलैंड घूमना है या आई हैव हर्ड इट इज वेरी वेरी गुड अच्छा अच्छा वेट ले गिव मी मनी RBI keeps it, calls someone. Take this. What is this? जा शिमला घूम के आ. Why? Because rupee is not convertible. Rupee is not convertible easily. Convertibility was highly restricted. Convertibility was highly restricted. That is what we mean by rupee convertibility. You cannot convert your currency easily. I hope you got this point, guys. Fair enough. So this is what is we mean by convertibility. Before 1991, 1999, the convertibility was not very frequent, but after 1999, we made current account fully convertible, but capital account was still partially convertible, which is why in India, rupee is only partially convertible. Why? Full account convertibility in current account, but partial in capital account. Tell me, guys, how do we differentiate between current account and capital account? How do we differentiate between current account and capital account? Now, see, whenever you will have money, what will you do with that money? बैठ के chatting no, you will either save it or you will spend it. Whenever you will have some money, after all your money has been paid, you will either save your money or you will spend your money. So if you are spending some money for some consumption purposes, that is called as current account. If you are using your money for some investment purposes, that is called as capital account. So that is the difference between current and capital account. So in all over India, in domestic area, there is partial rupee convertibility, but in gift city, it is full convertibility, and that is a very important question that they can ask. Now, in gift city, what are the incentives that we are giving? We are giving them multiple tax incentives. No income tax for 10 years. No income tax for 10 years. At the same time, no GST on IFSC transactions, no securities transaction tax or even commodities transaction tax on IFSC. Then streamlined regulatory procedures. They don't need to go to multiple departments. They can have their own, they can have a single window clearance system as well. Streamlined regulatory procedures and single window clearance system. Now, let's try to see what all are the other things, that the challenges that we are facing in the gift city. Now, see, the first and foremost challenge that we are facing in the gift city, the first and foremost challenge that we are facing in the gift city is the talent pool. Because Gandhinagar, as much as we would want to develop Gandhinagar, most of the talent is in states like Mumbai. Most of the talent is in Mumbai or Delhi. In fact, Mumbai is the financial services center of India because most of the talent related to finance is in Mumbai. Mumbai Pune is the major area. So most of the talent pool is in Mumbai Pune, which is why talent pool is not there. Unless you have a good labor supply, how will you scale up any financial services center? In fact, it is because of this that even though liquor is banned in whole of Gujarat, in gift city it is allowed, because we want them to come here, we want them to come here with their families, we want them to settle here in the gift city. Then pace of innovation. So Dubai, London, they have very high number of companies working there, and their pace of innovation is very high. We are not able to keep up with that pace of innovation. We are not able to keep up with that factor mobility as of now. Since we are in the starting stage, limited products are being offered. In fact, like swaps, I hope you understand, swaps, forward contracts, all of these are being in limited supply because of heavy regulation. Then INR is not fully convertible in India. Although it is fully convertible in Gift City, but to reach Gift City, you first need to pass through a domestic tariff area. And in that domestic tariff area, INR is not fully convertible. Then much of the transaction volume that is happening, companies are trading their own money. They are not trading others' money. So, for example, you and I are not investing in IFSC. Companies are investing, and that is one of the impediments in the adoption of IFSC. Unless the retail people also start participating, unless others investors also start coming, It will not work. So, for example, imagine a mutual fund which is investing its own money. How prosperous the growth would be. So, this is another problem that we are facing. That imagine mutual funds investing their own money, not taking money from the public, because public does not even know that they can invest here. Other problem is dispute resolution mechanism. So, in fact, before in 2016, we had IBC. Our dispute resolution used to take 4 to 5 years. Compare that with other states where it could get completed within few months. So dispute resolution, the businesses want quick dispute resolution. They cannot wait for 4 to 5 years. If there is a dispute, it needs to be resolved within 1 to 2, maximum 3 months. Otherwise, commercial areas become very, very problematic. So that is another challenge that we are facing in Gift City. So it is in that context that we need to know what all can we do. First is better city planning to attract the better social structure. People should come there, they should have good housing, they should have good facilities, they should have good places. And even for this, we have a walk to work concept, something we can use in Bangalore. Traffic is too high. At the same time, we need to go merely beyond tax breaks. We need to go merely beyond tax breaks. We cannot expect that only since we are giving tax breaks, companies would come and invest. Otherwise, in fact, this is the problem that we also face while talking about urban areas versus rural areas. Even though we want rural areas to develop, people would still come to urban areas. Why? Because of perfect factor mobility. Now, what is this perfect factor mobility? Factors of production, land, labor, capital, entrepreneurship. Urban areas give a flexibility that land can be used for any sector, labor can go to any sector, capital can go to any sector. Similarly, in IFSC, the number of sectors that are there currently are limited. So we need to increase more sectors in the IFSC so that more people would be interested in coming up there. And then the next is that we need to have the in 2018 insolvency committee. This was a parliamentary committee. They suggested that we should have unicitral. Okay, we should have UN citral based model insolvency, and that is why they are saying that we should also amend our insolvency and bankruptcy code. Okay, and recently the NSE has also tied up with Singapore to have an international arbitration center in India only. Okay, we have tied up with Singapore to have an international arbitration center in India only. So this is the possible way forward. Let's try to address this question. Which of the following measures were announced recently for GIFT IFSC? IFSC will be delegated powers under SEZ Act. This is correctly. A subsidiary of Exim Bank would be established for trade financing. Now, see, IFSC will be delegated powers under Special Economic Zone Act. This is right. A subsidiary of Exim Bank would be established for trade refinancing. Guys, can you tell me in comments what is this refinancing? What is this refinancing? Offshore derivative instruments would be de-recognized. This is a wrong. That is precisely what we are doing with SGX Singapore. That is precisely what we are doing under SGX Singapore. We are trying to bring derivative instruments to India. Decentralization of IT system for approval. Decentralization, no, we are going for centralization. We are going for centralization so that there is a single window clearance. Correct. What is refinance? So in refinance, a company finances the financer. For example, NABARD does not give loans directly to the people, but NABARD gives loans to institutions who then give loans to the consumers. That is what we call as refinancing. So the answer is C for Chennai. Next, IFSC. IFSC, it is a statutory body, yes, under IFSCA Act 2019, and it is unified body for financial services. Both are right answers. Then do attempt this question. We've already discussed this. Do try to attempt this question. Now, last topic, guys, we'll just take 10 more minutes. Let's try to understand few of the changes that happened in UPI, because few new regulations have come up from January 1. Now see, when was UPI launched? UPI was launched in 2016, and since then we have had phenomenal trajectory. In fact, around 80% of total digital transactions in India now happen through UPI. But UPI has had many policy steps. One of the policy steps that it faced was zero MDR policy of the government. Now, what is this MDR? MDR is merchant discount rate. Now, this merchant discount rate, what used to happen under this merchant discount rate is this is the rate that was charged by the banks to facilitate digital payments. And in 2019, government came up with that policy that banks will not be allowed to charge this MDR. And from January 2020, this policy was implemented. Then 2021 pandemic gave a fillip to digital adoption because everybody wanted to now go digital. And then by 2022, we have something called as UPI 123 and UPI Lite. Let's try to understand all these changes that have happened. Now, from January 2024, the reason why is it in current affairs, let's try to understand the 5 relevant points that are there. The first is that the UPI transaction limit. So initially we could transfer only 1 lakh rupees, but now we can transact around 5 lakh rupees, but not at all places. Not at all places. Instead, only for hospitals and schools, only for designated places. So this can be a predictable question that recently UPI transaction. Tell me guys, is this a right statement or a wrong statement? That recently UPI transaction limit was increased from 1 lakh to 5 lakh for all types of transactions. Is this a right statement or a wrong statement, guys? Correct. So that would be a wrong statement. Correct, guys. Very, very good. Divankar, Anjali, Akansha, very, very good. Chalo. So what is the next? Deactivation of inactive UPI IDs. If you have not done any transaction since past 1 year, your UPI ID will be dismantled. And why is this happening? Why is this happening? To get rid of bogus accounts. Then UPI Lite transaction limit was increased. Initially, what is this UPI Lite? So UPI Lite was offline transactions for small amounts. So UPI you can transact for around 1 lakh rupees, but for UPI Lite was launched in 2022 so that you can transact around 200 rupees, 500 rupees easily. Now this limit has been increased to around 2000 rupees. So this has also been increased. Now initially, if you had some auto payment till 15,000 rupees, you did not need to pay, you did not need to have any OTP or anything. So if you have an SIP for 10,000 rupees, it will not, for 15,000 rupees, it will not ask for an OTP. But if you have an SIP in a mutual fund worth 50,000, every time you will have to give an OTP. So for that, it has now been increased to 1 lakh. So up to 1 lakh, you can pay, up to 1 lakh, you can pay without OTP. Now see, so UPI Lite was done. UPI Lite was done for smaller transaction amount. And that is what we are also changing under UPI Lite X, under this UPI Lite X, smaller transaction, plus we are also now going offline. In fact, this is what we changed under UPI 123 Pay. We also went for offline transaction, which means it can work on feature phones as well, not only smartphones. This UPI 123 and UPI Lite that we came up in 2022. Next is interchange fee on UPI merchant payments. So, not all payments attract this, but only if you pay, for example, from a prepaid instrument such as your Paytm wallet, such as your Paytm wallet. If you pay to a bank will charge some around 1.1% amount, but it will not be charged on you. I hope these 5 points are clear, guys. If any doubt, please ask. If there is any doubt till here, please ask. This is what has happened recently. Done? All right, guys. All right, guys. What is PPI? Prepaid payment instrument. Okay, prepaid payment instrument, Jia. For example, your Paytm wallet, you've already uploaded some money, and that you can use to pay at certain places. Now, one question we need to ask ourselves, that how has UPI become such a success? See, first of all, we need to understand that it was a business process innovation. Now, what do we mean by this business process innovation? Business process innovation means it was the first which focused on mobile banking, because before that, 2016, everyone focused on internet banking. So UPI was the first who focused on mobile banking. Mobile banking, which means from mobile only you will be able to send money. Before that, there was internet banking, but you had to know the name, account number, IFSC code, all these details you had to know. But now you only need to know one ID, and even you could transact through phone number. That is the basic business process innovation that it did. And the other thing was that third party access, and this is what is called as open access. Anybody could plug into this data and use it. So any company can offer UPI as a payment system. Any company could plug in and use UPI as a payment system. That is what we call as open access. Before this, all the payment systems were restricted access, and that is what was the major business process innovation. Next is political will. Since we had zero MDR, for this we also had, along with this, we also had payment infrastructure development fund, so that the payment infrastructure can be developed. Along with the political will, we spent lot of money on improving digital payments, monetizing data. Why do you think that GPay, phone pay, all of them have all of them are coming up with this UPI payment system? It is because of the data. This data will give them spending habits, and with this spending habits, they can know of the latest consumer preferences, and that is where it becomes relevant. And then continuous improvements, initially from UPI 123 Pay, UPI Lite, then UPI Lite X plus, even RuPay credit cards, not only debit cards, but you can also use credit cards on UPI. So all these things are what have enabled the faster adoption of UPI. This is a very important point, guys, because nowhere you will find all these points together. If even if you will Google what are the reasons for UPI success, You will not find any concrete points. So these are the points that you need to address if such a question is asked in means. Political will means the will of the political class to push for digital payment. Next, what are the current issues? The current issue is first of all of regulation. Why? Because first of all, the current issue is of regulation. Now, what is this regulation? See, UPI, not we have started regulating who all can access UPI. Vivek, you have been asking same question since past. Have you tried Googling it? Google. Now see, you are asking out of the topic. Ask the question of the topic. Now see, now this regulation, what is happening is UPI has been having strict problems. Why strict? Because we have not allowed for internationalization as of now. Although we are now working on it, whether it is France, Bhutan, we are working on internationalizations, need to become more relaxed. Dominance of foreign owned apps, so Phone Pay and Google Pay account for around 80%, account for around 80% of the total payments. Phone Pay is owned by Walmart, GPay is owned by obviously Google, and both these are foreign. In fact, our domestic Bheem UPI, I don't even think any one of you would have downloaded Bheem UPI. It accounts for less than 1% of total transactions. Then security and fraud. You must have heard so much about the UPI frauds. Ultimately, in fact, if you talk about all the cyber frauds that have happened, UPI or digital frauds are amongst the highest. UPI will be at the top level. Then no incentives for banks to innovate without MDR. Banks say that what is our incentive to innovate if we are not getting any fee? So that is also a problem that we need to solve. So what is the way ahead? Relax regulation, more POS, point of sales, plus we need to have more internet connectivity. Then fraud protection, which is basically quicker resolution of problem. Education and awareness. In fact, both these points are interrelated. In fact, both these points are interrelated. So, for example, for this only, government has also come up with a scheme, Disha, Digital Saksharta, so that people are now aware of UPI. So this is the way ahead. Let's try to understand few questions. Consider the following statements with respect to digital payments in India. In India, digital payments are regulated by RBI. Which act, guys? Payments and Settlements Act 2007. Please remember, it is not the RBI Act. Then, digital payments are carried out only through online mode using internet. I hope you do remember UPI 123 Pay. In fact, this is for feature phones. Among digital mode of payments, UPI transaction is high both in terms of value and volume. Very, very good question, because it is only in terms of, so UPI number of transactions is high, but value is low. 5,000 rupees, 10,000 rupees. Checks, all these other digital payment modes are having higher value ticket. So even this is wrong statement. Answer is A for Ahmedabad. Then RBI has recently launched UPI payment solution UPI 123 Pay. Let's try to discuss. To initiate, execute, for which work on smartphones. So this works on feature phones, normal phones, Nokia wala. So this is a wrong statement. Although we have arrived at the answer, but let's still see. It allows scanning and paying, which enables to do transactions. It does not need internet connection for transaction. Okay. So today 10 prelims based questions we have solved, guys. Okay. Today 10 prelims questions we have solved. And do try to solve this question. So today we have discussed 3 mains questions and 10 prelims questions. Do try to go through those questions and write to us at the relevant ID. This brings us to the end of this session. If there are any doubts, please ask, guys. Not correct is asked. Okay. Please make the correction, guys. Please make the correction. These two are right statements. IFSC comes under SEZ Act. Gia, IFSC was established under SEZ Act, but yes, now it is regulated by the IFSCA. Economics is not a very difficult question. Economics, basically, you need to understand it in a more simpler way. Every subject has its own challenges, whether it is science and technology, environment and ecology, geography. Every subject has its own challenges. Art and culture, every subject has its own issues, guys. Why RuPay card only agree between some countries? Because RuPay it will take some time for adoption. Saravana, PPT. I think it will be mailed to you guys. What to write in the conclusion? Which question, Lakshmi? M1, M2, or M3? All right, Jaya. Thank you so much. Is there a de minimis for green box? No, Rijuta. The limit is there only for amber box. No limit for blue box. No limit for green box. Vivek, did you try Googling it? So many times you have asked. Ruchita, I am not sure about the schedule. Actually, my schedule clashes with the offline, but yes, we will try. M3 question. You want to ask what is the conclusion? Conclusion, just write down any conclusion that UPI is a breakthrough technology and it needs to be internationalized. However, relevant steps need to be taken in the domestic scenario to boost its adoption even in the rural areas because currently it is getting dominated in the urban areas. All right? All right, guys. Thank you so much, guys. Thank you so much. Have a good night.